5, 4, 3, 2, 1.
What up, fam? How's everybody?
Doing good. Good morning.
I'm at the freestyle this.
Morning.
Can't bring my thing up. So, good morning and welcome to the Morning Market Minutes, brought to you by 3T Academy and your host, Double Bottom Trades. Today, we're going to bring you the latest in trading strategies and techniques. Before we get into the market, though, we're going to need a little pick me up, a little boost, a little motivation. Because man, this has been a wild market. The SPY has got some people in probably in some depression states, probably going to counseling, maybe sleeping on a cot somewhere. The SPY has been really crazy. So we want to make sure we're in a good mood and a good frame of mind before we get started. What you got for us, fam?
All right. Good morning. This morning's motivation for May 10 is, if the opportunity doesn't knock, build the door.
Ooh. Wow. I like that one. I like that one. That's exactly what we did, man. There was no traders, day traders inside of the academy. So what did we do? We fucked around, made our own door. That was good. That's exactly right, man. If something doesn't exist, there's nothing to say you can't make it exist, because we're all children of God, and that is the most powerful creature on the planet. You can take a thought. We are literally the only creatures that can take a thought, bring it to fruition, and there you go. If you want a door, make that motherfucker. And then walk through it. And walk through it with some swagger. Like strut a little bit, slide in there, dance, do your little jig. All right, y'all ready to get into this, man? So the first thing we're going to get into is the fear and greed index. I'm going to share my screen before I do that, though. It's a lot easier to see the fear and greed index when you can see the fear index, at least in my years. All right, so the fear and greed, we're sitting at a 60 today. Should be moving in the market, man. I like 60. I like anything above 19 is good to me. And it gets in the teenage years, man, it gets a little crazy. He wants to do what he wants to do. A little more difficult to make money in that area. Let's go check out FinVid. I lost all my stuff today. There we go. All right, so we got the Dow at minus 56 points, the NASDAQ minus 77, and the S&P 500's minus 1895. You can see they all hit those tops. We had a big green candle, a big red engulfing candle, a bearish engulfing candle. Came down, formed a gravestone, had a couple dojis form, and then just topped out and then really broke off. That was a nice, strong level. We've seen those levels all day yesterday. It was just, seemed to me every time I looked up, it was just moving sideways. Same thing with the NASDAQ. It topped up right above the 12,200 here, had a couple doji stars form, spinning top, another couple dojis. And then what did it start doing? Just started cranking to the downside. Kind of logged on this morning to see what the actual market's at right now, but it looks like it's hitting these bottoms. We'll see if we go through or not. Once we put our plan together, if there's nothing popping and the volume's not there, the market is playing something else, 9 times out of 10 they're playing a previously spiking stock, and usually it's one of the top gainers. SFWL, CLRO, MOBQ, TCRX, et cetera, et cetera. So if you can't find anything, or we don't find anything in the plays that we're looking for, but you still want to trade, go try one of these. You should be able to find something in there. Let's get into the morning squawk, man. See what it's talking about first. It's low, man. There we go. Morning squawk. All right, Wednesday, May 10th. Where do we go from here? Push to the limit. 9 reasons to avoid annuities. Disney on deck. Decent report for Vivian. E. Jean Carroll triumphs in court. I gotta love this shit. It's all a game. We'll go over a couple ones because they will affect the markets today. But we're not going to go over all of it. I do recommend you guys, if you can get the morning squad, get it downloaded, something good to watch. just gives you a brief overall of what's going on in the market, what could be happening. Where do we go from here? Markets haven't had much direction this week as investors prepare to parse the latest inflation reports from the government. The consumer price index for April is due out Wednesday morning. Wall Street expects a 0.4% increase in prices month over month and 5% year over year. The Federal Reserve has been trying to cram down the pace. I think that's supposed to say cram down the pace of inflation with steady regime of interest rate hikes. But while the Fed's policymakers have signaled that they are likely to pause increases, we're still far away from the rate cut. So it's unlikely CPI report out on Thursday, Producers Price Index, will change the Fed's thinking. I'm very interested to see what those numbers are going to be. I think they're still trying to get us down to 2 to 3%, and that's going to be a painful push when they do it. We'll read this one, and then you guys can read the due diligence on the others. Push it to the limit. The big meeting between President Joe Biden and the four main leaders in Congress didn't yield any progress on the debt ceiling, which, going by the Treasury Department's calculations, is rapidly approaching. Still, the sides plan to meet again, which indicates the gears are at least turning. Republicans, led by the House Speaker Kevin McCarthy, have said they would only address the debt limit if there are spending cuts attached. Biden has refused to negotiate over the debt ceiling of itself and would rather negotiate over spending as a separate issue. Even with the United States credit and reputation on the line, markets have reacted all that much in the brewing crisis. We'll see whether it changes if we go a few more days without a deal. We've never defaulted. I don't see us defaulting, but I never would see the shit that's going on right now would be going on. So just to be real, like I've never seen it happen. I still in my gut think it won't happen, that it's all politics and they're doing that. But man, Title 42 is going away, and I don't know if y'all seen the border down there. And along with this coming up, it's just be prepared, man. We've never defaulted. We shouldn't now. We can pay our bills. It's just what bills do you want to pay? And this is, like I said, man, it seems to be very, very purposeful in what they're doing. So be prepared, guys. Have you a plan and just be ready. Don't be scared. Just be ready. Let's see. That's the wrong market list. Destin, are you in here, guy? No, yeah, no. No, okay. So let me get into, before we get into that, we'll go into the DXY, and then I'll try to get my screen up. Lady A, can you give us some info on the DXY? And I'll stop sharing my screen. If I can.
You can do it.
I knew I could. Thank you for the positivity. I needed it.
Let's see, screen. There we go.
It's a light day today.
All right, this is the DXY. All right, this is on the 4-hour time frame. This is still the long-term support level right here down at this 101.054. We have a beautiful double bottom, which means that it's in a bullish posture. These are short-term fib pulls. Bounced right through the 0.5 fib with no problem, which indicates strength. So with that being said, we need to keep a real close eye. A rejection level can be at the 618 or 2. If it gets through both of those, we're going on a run. So these two levels here is something I've been keeping an eye on. I was getting nervous because this is a 4-hour, so every candle is 4 hours worth of time. So I'm going to switch to the daily and kind of show you in the past 3 days, we've had just a slow climb up. I am going to make these guys disappear so you can see that more clearly. This is that long-term trend where my cursor is at, where the dotted line is. So we have a very slow trend up.
That's a trend now.
This candle right here is a reversal candle of a downward trend that you see that starts up here, that comes down, and then we get this reversal candle down here.
Oh, yeah, I agree.
So, and as you can see here, this is a bottoming structure. When you get a large engulfing candle, you get another large candle, and small red candles. It's just consolidating in this area. This is what we've been talking about the past couple weeks with the DXY. Had a little correction, building strength. It's got a higher low, and it is going up, and I suspected that was coming.
I like it. I like it. Good TA, girl. Nice. I like that we do the DXY now. It's actually really informative. Kyle, what you got for the SPY for us today, man? Talk to me. I like to hear some golden pockets and some fibs. Y'all changing my mind a little bit. Just a little bit. Not yet. We're about 85 and a third 0.2% there.
So this is on the weekly. The SPY has been moving really slow this week. It hasn't been having like big movements as we've been seeing, in previous weeks. So this is something that I stress to everybody, and sometimes it's hard to do, but patience is very key in this market. And the reason why I say that is because you have to wait for that play to happen before you actually go for it and make it. Because if you don't, you could easily get wrecked. So right now, this is on the weekly, and we're still trading within this. We're coming to this apex. If you pull a longer term fib here from this swing high down to this swing low, it seems like we keep getting rejected here, at least this week on this 0.5 fib here. We haven't even reached this 0.5 fib, so it's possible that we can get up to that. But on a shorter time frame, go on to the 15-minute. The last few days, we've really been trading within these ranges right here. We've been getting stuck up in here. This being support down here, this being resistance. And then yesterday we were stuck in this channel over here. So if I were to pull a shorter term fib on this, levels to be paying attention to. It's also been holding this shorter term trend line right here. So if it breaks this and breaks this down in here, we could start seeing these lower legs down, which would also be this 0.382 fib. In previous, I went back and kind of checked this out. I think I mentioned this yesterday as well. The 0.382, it normally always comes back and retest that before it reverses and goes into an uptrend again. So it always comes back down eventually and tests this 0.382 fib. So keep an eye on that level. On the upward side, we have to get, it looks like we're coming to an apex there. We're going to have to get out of this right here, and then we're going to be coming to test the bottom of this golden bucket, which is like 412.35. So pay attention to those levels. As it gets up into the golden pocket, obviously we can run up to higher levels. So that's pretty much it for the SPY today.
Good shit, bro. Good shit. I love it. I love it. I love when you do analysis, fam. And now back to the sticks and stones and the cave wall drawings of young William. I like the fibs. Y'all are selling me on the fibs a little bit. For the newbies, though, I still want you guys. We're gonna get you to the fibs, man. But I want you to be able to draw your own lines. That way, you know why that line is there. When you draw fib lines, it'll put it there for you. But do you know why it's there? Once you know why the lines are there, how they act, and things like that, then I feel like you could, introduce the fib level to yourself. These are just the levels that we've had set from previous TA that we've done. And I don't see anything wrong with keeping them where they are. I agree with Kyle, what he was saying about the golden pocket and then getting below that level and retesting. We'll see how it's going to play, man. It's so choppy in here. I either want it to, I have my trend going to the extend to the right.
Do you want to share your screen?
Nope. Yeah. Dang, y'all don't know how to see through the bazillion miles away.
I mean, we can probably see it. We've seen it so many times. But,
Yeah, you're right. No,
I think everybody else would like to.
I appreciate you, fam. So we're sitting at this 409. Like you said, we got a slight trend up. I'm seeing exactly what he's seeing. Those are good levels, Kyle. I really like those levels. I do feel like we'll come back and we'll test this area. before we start to get into this next one. We are in this apex a little bit. Calls are dangerous, man, even on this side of it, because you have so much shit here. We have if you to take another trend line, you have it right about there. Oops. So what I'm thinking also is, if we're on this trend line, I don't know about this one. This is iffy, but this is definitely on point. If we come down, just like Kyle was saying, and we touch that level, if we break that level, then we're going to be looking at this trend line. At least is my thinking. Before I went on a call, golly, it's going to have to do something like stupid nasty. Man, I'd have to get back up in these 411.84 areas or even the 411.15 area. There's a lot of noise here, but we'd be past this downtrend right here. There it goes. We'd be past this downtrend. It's been a pretty steep downtrend coming all the way down. So I feel like this is maybe a level we could get into, but I'm telling you right now, my stop losses are going to be tight. I don't care if I get stopped out 4 times, my stop losses are going to be tight. If you're going to play a breakout, the only thing that I recommend that you do, you're only going to do one or two ways. You're going to either buy small in, and then you're going to take small profits, or you're going to buy large in and take a bigger size profit. But whatever you do, make sure you have those stop losses. This is not the market to be playing with. You see how this thing was all the way up here at 411.60, and the VWAP just, crank to the downside. This market is unstable. So make sure you get your profit area. You know what you're going to get in and get out. And the key right now when you're doing that is not to make the profit, but to understand, did you see the play? Did you see where you needed to get out? Could you, predict it by your lines and have an idea where it is? Once you can understand that on a regular basis, then you will start understanding how to make profit. You got to understand the play first. I do want to touch on something before we get crazy into it. Oh, you know what? We'll wait to stop the video because that'll be a team message. I don't have all my stuff. Darren, what do we have going on in the mortgage industry, fam, before we wrap this thing up? Oh, Dustin's here. I'm going to let him do the market watch too.
Okay. Did you want me to roll, brother?
Yeah, go ahead and roll, man. What's going on in the market? Do you have anything you want to share?
I do. So last week, we all know the FOMC met, and they did, in fact, raise rates another quarter basis point. So in 14 months, we've seen the Fed funds rate go from 0, basically, up to 5.25%. So they've essentially raised rates in 14 months, 5.25% from where they were in the past. We're starting to see some pretty interesting side effects from it, but we haven't really seen what the full impact of that is going to be. It generally takes literally about 12 months to see how that's going to fully impact the economy. The FOMC is going to meet again in June, and what they're going to do is going to be dependent on what happens between now and then. So we still have 2 CPI reports coming and 1 more jobs report between now and June. Fed funds, when they started, were literally at 0%. If you guys remember when rates were super low, yeah. The Fed funds rate was 0%, and now it's at 5.25%. What we're seeing in the bond market is kind of interesting as well. I'm going to talk a little bit about that because the bond market directly affects mortgage rates. So on the 10-year Treasury, that's what we watch the most. It closed it had a yield of 3.57% and a low yield of 3.33%, and it closed at 3.42%. So the 10-year Treasury was down only 1 basis point. And then what we've been seeing is, I don't know if you guys have heard of the 1-month T-bills, but they're trading at a 20-year high right now. T-bills are. So that's something that would be a good investment, but there's a yield at 5.5% on the T-bills. And mainly what's causing that is debt ceiling worries for June. with the maturities of the T-bills.
Yeah.
It's just really interesting. We've never been in an environment like this. Like you were talking about how we don't know, if we're going to default or anything like that. I wouldn't think we would. I think they're going to raise the debt ceiling. But there's some other factors that are working against it. What we're seeing, like, here's an example in Manhattan, like right now, 80% of all bank lending is done by regional banks. And we've seen 3 banks crash, right? In the last few months.
Yeah.
So 80% of the lending is done by regional banks, but most of their lending is actually for office buildings, statistically. They fund it. So commercial real estate is crashing throughout the country right now. And the reason for that is like the pandemic workers, they're not returning to the office. So in Manhattan, New York, I found this statistic crazy. There's 94 million square feet of empty office space in Manhattan alone. Yeah. So that's the equivalent of 37 Empire State Buildings vacant right now in New York. Yeah. So 75%, that's a 75% increase in vacancy since the pandemic started.
That's what I'm talking about.
And then now this is all speculation too. This is what the FOMC is saying, but they're saying that possibly in July, we're going to have a rate cut. So they're also saying that we could have 2 more rate cuts in September and October, but they're trying to balance that out because if they start cutting rates, and my personal opinion is we're in a recession.
Oh,
but they're not saying that. They're saying that we're not in a recession, and they're saying they're trying to balance. I think we're in a recession, and they're trying to find out if they cut rates, if that's going to plummet us deeper and drive that knife in harder, which would be how the devastation starts coming in towards the back end of this year. So that's what I have to report today. We're going to have to see what happens, but anyway.
No, that was great information. I agree with Don said too. It's a purposeful transformation, man.
It is.
They're getting everybody out of houses. You're not going to be able to buy a house. If you do buy a house at this time, between the market going and everything it's doing, I feel like people will get pushed out. And they're getting so close to you owning nothing and gonna be happy about it because it's gonna be too hard to own anything. And then this 15-minute city thing, my wife laughed at me last year when I told her about it. Oh, you need to stay off TikTok. It's all right. You're gonna find out when you can't go down to the store because it's 15 minutes down the road and you gotta have a pass to get your milk. But we're talking about it then, but that shit's becoming real, man. It's becoming real. And the thing to understand is all this affects our market. Title II affects our market. The immigration aspects, the fentanyl aspects, the China aspects. And it's funny, all this stuff's happening. We see China stocks popping left and right.
Right.
It's just wild. I'm not a conspiracy theorist. I'm just a truth teller.
It's all very interesting, I mean, look at property taxes. Like Colorado just took a 35% increase in property taxes. They raised my property taxes. I think I'd have to look exact, but $1,400 a year. I just got the bill last week for that. So
yeah, I had to fight with mine too. They've been trying to charge me Cali taxes in South Carolina, and we've had to show tax returns that we don't own property in other states. South Carolina, man, it is something else. Let me just tell you. I appreciate the knowledge on the mortgage industry, brother. It's good to know. Dustin, what do you have for us on the Market Watch, fam? And then we'll get to building and watch it. Smile, Kyle.
All right, for Market Watch today, the CPI data just came out for April. It rose 0.4%. And some things that I was reading around on with regards to this, there's a lot of word games being played. It rose in April, but they expected 5%, but a lot of news articles say, well, it declined to 4.9 from expected 5. So it's a bunch of word games they're trying to play. So it rose again here in April, which is not great news. With regards to the rest of the Market Watch, so we'll see how that plays out with the market today. Tomorrow we have the core PPI data being released, the initial jobless claims, and the continuing jobless claims on Thursday, like normal. So Thursday's our other big report release day. So we'll see what happens tomorrow as well, how that impacts the market too.
Look forward to hearing what's going to go on. Man, let me just pull this last thing up. And I think that's it. That's a wrap for today's morning market in minutes. Or what do y'all think about this? What was the name? Warriors of Wall Street's wake-up call. What do y'all think about that? We're doing a name change. And I think we got a list. What do y'all see? A bunch of heads bobbing. Dawn, she even got that smirky smile on there like, that's all right. That feels good coming out the mouth. Yeah. The Warriors of Wall Street wake-up call. I like that. That touches a nerve, man. All right, so with all that being said, man, I'm so glad to be back with the fam. I feel like I've been gone from you guys forever. So yeah, that's a wrap. We're going to get in here. We're going to make this build. Just remember, today is the only day promised. The next 2 minutes are the only thing promised. Shit, maybe only the next minute's promised. You don't know when your last breath is going to be. So just like my team told me yesterday, man, I've been struggling for the last couple of days. You got to learn to be present. Things are going to take care of itself. You got to go through the process to let things take care of themselves. And don't get so caught up on what could be or what is going to be, but what is right now. And if we can stay in that place, and trust me, I speak it all the time, but it's just as hard for me as anybody else to stay present in this moment and actually enjoy what it is that we're doing. Like right now, we got 16, 20 people on this call that we all get to hang out with and go fuck this market up together. That is the present that I want to be in. And so shout out to my team. You know who you are. That talks me off of bridges on a daily basis and takes my text messages at 2 a.m. in the morning because I do dumb shit. So I love you guys, man. Go make today your bitch. And I mean that with everything I got. Fuck this day up and make it yours. Mold that son of a bitch, thump it in the head. Throw ball with it if you want to. It's yours. You can do anything you got. Anything you want to. You got 24 hours to fuck it up. Go do what you can do. I love y'all. Deuces.
Recording stopped.
Have you gotten wrecked in the crypto market space or watched your crypto portfolio go all the way up and then all the way down without taking profits? If so, it's probably because you didn't have an exit plan. The good news is that doesn't need to happen anymore thanks to a new and innovative crypto tracker called Merlin. It's the smartest way to track your crypto. Merlin brings all your coins into one place so you can see all your assets across the different exchanges on one screen. You can see your total portfolio value and, more importantly, your daily gains, losses, and totals since inception. Merlin puts the power back in your hands so you no longer have to guess what your portfolio is doing on a daily or monthly basis. Most importantly, Merlin lets you create an exit plan and sends you notifications when your targets are reached so you no longer have to get wrecked in the marketplace. Go to merlincrypto.com, that's merlincrypto.com, and sign up for our free 30-day trial and get on the wait list so you can receive an email when the product is launched. Don't miss out on this new and innovative app, Merlin. It's the smartest way to track your